Good day, everyone. Well, I showed a chart in a prior report where the Fed funds rate typically follows stock market direction. And that also equates well with the rough principle of three steps in a stumble. And that happens when the Fed hikes a few times, which then ends the bull market, and that forces the Fed to then lower rates as markets go lower. The US 3-month Treasury is also a solid predictor of direction of interest rates. So while the stock market leads the Fed funds rate, the 3-month Treasuries lead the FFR. And you can see that in the chart there quite nicely. So as an example, T-bill rates peaked 4 times in 1980 to 82. And each of these peaks occurred a month or more before subsequent and reactive peaks in the federal funds rate. The Fed's rate also lags at bottoms, as you can see in the chart at the lows of 1980, 81, and 82 to 83. The ascent of 3-month Treasuries is slowing, but still on the rise. It's key to note that due to record debt, historically low interest rates up until recently, and soaring inflation, a perfect storm was created that forced the Fed to hike rates all year in the face of a bear market. This decoupling is historically unusual, so expect materially serious consequences ahead. That is, the major bottom in stocks and crypto markets has yet to come. Indeed, the macro environment has never been worse in this long-term debt cycle, as detailed by Ray Dalio of Bridgewater. Now, according to various Goldman Sachs and the like investment banks, inflation is likely to stay stubbornly high. That is well above the Fed's 2% target, so rates are also likely to stay elevated. The CME Fed Funds Futures predicts the Fed funds rate will remain at 475 to 500 basis points. That's the terminal rate suggested now, until late 2023. While inflation may soften to around 4 to 5% over the next couple of quarters, it gets a lot harder to reduce inflation below this point due to supply side limitations. As we've written, the Fed does not have the tools to fight supply side inflation. They can just hope demand sufficiently cools so that the demand side of inflation drops. Meanwhile, Powell's dovish words last week has given the recent dead bad bounce more upside momentum, but the Fed has already made it clear they've got to reduce inflation down to their 2% mandate, so they have to continue to hike rates. And this is going to cause a severe recession since they can't have it both ways. They can't have a soft landing by pivoting and at the same time reduce inflation down towards their 2% mandate. But then we know that the Fed has made such misstatements numerous times in the past. We'll all remember when Powell said inflation is transitory back in late 2021. Then the Fed said later, we are not in recession. And that was after 2 quarters of negative GDP growth on the basis that the jobs market is still strong. Well, Powell is not stupid, so he's really a mouthpiece for market manipulation. He's got to know that unemployment is always at its lowest before it soars and recession begins. This is history over and over again. I published results showing exactly this behavior in what became an infamous study in the year 2000, where I called for a recession in 2001. My study was denounced by Wall Street, some on Wall Street, because I was the first to use the R word. While Wall Street, we know, is all about bull markets, which keep customer interest and sales strong. What I showed then, of course, came true in 2001, and it's still true to this day. We're already looking at straight in the mall of a serious recession. So I would expect that soaring unemployment is next. Then you get the deep recession, and both stock and crypto markets retest and plumb new lows in the months ahead. The S&P 500 has never bottomed before a recession since World War II. So expect the recession to be materially worse. And because we're in one of the worst macro environments on record, I think that the Fed is going to be forced to pivot, to halt and then to halt and lower rates. Eventually, as I illustrated earlier, this is a first for the Fed, as they normally follow the stock market with their interest rate decisions. So this time is indeed different. And we can see on the chart that the NASDAQ is the weakest index. That's the risk on index. And new bull markets never are led by the Dow being the risk off index. And you can see, of course, the Dow has been the top performer. NASDAQ has been lagging. The Russell's been lagging. And it looks to me like the NASDAQ is rolling back over again as I speak. Gil, how are you seeing everything?
Oh, I think life is short, and I just wanted to say, for those of you who don't know what's up, we lost Kevin Martyr the other day. He passed away after a short illness, and it's just a reminder that, and we talk about this in our books, that one thing about trading is that it helps you learn to live in the moment, and I think that the message is clear, and it's kind of how we're taking things as positively as we can. That life is short, and enjoy the moment. Anyways, the market is, you have a double top reversal here that started on Monday in the Dow, and you're trying to find support along the 20-day line. As Chris said, the Dow is, what did you say exactly? Risk off index, correct? Because you have these big,
That's right, yeah.
You have these big, long established companies. Okay. So in other words, they're kind of like monolithic. And so they're seen as, sort of like economically foundational companies. And Bill O'Neill used to tell me about this. Money will go there just to hide, because they know if a big storm is coming, then the bunker is going to still be there. And that's kind of what these stocks serve as. So when you see the Dow leading like that, it's very suspicious. And I know we had a lot of pundits over the weekend talking about how the Dow is now in a bull market. And when you start hearing that, that's when your short selling antenna have to go up. In the last 2-3 days, you've gotten a lot of tactical entries on shorts. Again, it's very difficult for us to put out short sale reports because things can change so quickly, and also they can become so volatile that trying to handle anything, unless you're day trading it or willing to be day trading it, just to minimize risk, even if it does continue going down, is very difficult. And so it's still not really what I would consider a trend followers market. Although we could see, if this rally fails badly, we could see the indexes head to lower lows, and then at that point, you could have another leg down. So a lot of these stocks could head quite a bit lower. NASDAQ Composite, as Chris pointed out, has been lagging. So that was one thing that has kept us cautious. But, we try to be open-minded about things. And there are some trades to be had. We've talked about it in our weekend focus list review. And we don't have a focus list right now because it's not a market for focus lists on the long side. So, don't email us wondering where all the focus list stocks are, because we're in a bear market, we think. And even when you look at this, if we look at this on a weekly chart, so I'm going to use the diamonds here, you're still in this big broadening pattern. And you notice that it just seems to get more and more volatile on the weekly chart on the Dow. And if we look at the SPY, a similar thing, but also you're in a pretty well-defined downtrend channel. And you've got all these highs running along here. Let me get my pen out. So you got, you can draw a trend line across. So you haven't made any progress through that trend line. And again, we're reversing at the 200-day moving average. So, we can get a nice trend on the downside. If you're just using inverse ETFs, it's quite possible you could do pretty well. So we've stuck with the sell signal, or rather, I should say Chris's model has stuck on the sell signal because there really is no indication of a true new bull market. It's just pretty much not there. Anyways, we look at what's getting hammered today. You can see airlines, Southwest Air, just blown apart today. And this is my down on volume screen. So I'm looking at stocks with an ERG over 150, which would be comparable to an O'Neill composite rating of 80, probably, maybe a little lower, 75. But you can see the big breakdowns in all these names. United Airlines looking like it wants to be a short in here. Some of these are just coming off. What I'm going to do, I think, is put them in alphabetical order. What happens with HES Investor, it's updating in real time. So every time it updates, it will resort for you by alphabetical order. I don't know why it does that. I think it should default to whatever sort you're working on. So if I have it, based on biggest volume or biggest decline for the day percentage change, it will shift that around on me. So you'll watch that happen. But I mean, a lot of stuff just getting whacked today. I think we're going to roll over, Chris. I think we've got a situation where things are becoming so unstable and volatile that this is like, as I was tweeting earlier today, it's like a supernova. It's going to blow up, and just like before it all flames out, right?
It certainly has that feel to it. I mean, it's all the bad things are in place. You know, it's like you look at the Nasdaq weekly. It looks very ill. You can't muster a good rally. If you look at this rally compared to the prior rally, that is this bounce versus the prior bounce. The prior bounce had more life in it.
Yes.
This it's really stiff and volatile, and wow, it's sloppy. It's very difficult to trade this. Yeah, that's why the model, I mean, the model is not designed for swing or day trade as opposed to like some people sometimes think this, but I make it very clear. This is designed to catch the major swings in the market. And when I made that major adjustment a few years ago, that made all the difference. That the model's only gone through 2 major adjustments well, since we started the site. And those were good things to do, because then, you know, when there's material change in the market, you got to change with it. So at least the changes are very infrequent. And yeah, I think, you know, if you look at the prior, also the prior bubbles, the NASDAQ was down 78% in 2000 to 2002. And then the Dow was down 90% in the early 30s. And the Dow, I mean, right now, what is the Dow and the S&P? The S&P was only off, I think, 20-some% maximum peak to trough, and the NASDAQ was like 33%. It doesn't make sense that this is it. This can't be the end of, or the worst that the bear market has to offer. It just can't be, because the macro is so much worse than, well, at any time since World War II, when basically we hit the big reset button.
Yeah, I mean, and if you look at this, you know, the Nasdaq. I mean, I don't understand why anyone would think anybody would think that the model would go to a buy signal based on that, and it's certainly not going to do it based on. Well, I'm just going to use the SPX here. Won't get the volume. Well, we did actually, but you're not going to base it on that either, because you haven't broken the downtrend channel. So this all looks like we could head lower, and instead of the Santa Claus rally, you get the Christmas crash, right? I think we coined that word a few years ago when we had a big Christmas crash. What year was that?
December 24th, 2018. I still remember that day.
Okay.
And, you know, who would think this would happen on like a half day? It's a half trading day, and yet the markets just were rushing to the downside. And I still remember Powell had to come, the Fed chair had to emergency broadcast, basically saying that, you know, he's not going to be tightening the balance sheet anymore. And that was pretty much
right here, right? This is it. This is when we just were blowing up, right? In December, the NASDAQ hit the 50-day line, and boom, it was straight down from there. So I think, you know, with the S&P hitting the 200, the NASDAQ hasn't even gotten to the 200. It is currently trying to hold support at the 50-day line. You bust that, you're going to lower lows, and you could probably do that very quickly. So, and another option here is you don't need a big position in the UVXY, but, you know, this has not really been something you've seen shoot higher and stay up for very long, mainly because there's a lot of complacency in this market, and you can get the sense now that you have retail investors coming back in, because you look at the AAII numbers, they're getting a little more bullish and less bearish. But I think you're drawing in, you've got people thinking, well, that was a bottom. The Dow's, everybody's declaring that the Dow's in a new bull market, and that's what gets everybody all hot and bothered. So they come in, and I think the smart money knows they've got a bid here, and they can work it. And so I think the volatility you're seeing today in the Dow, and also even the NASDAQ, which actually was briefly up for a second there, wasn't it? I thought I saw that. I could have been a hallucination, but, you know, now we're back down. The Dow's only up 59. We were just up 150 a second ago. And this could get really ugly. So, you know, if you're long, we felt that, okay, and we talked about this in the weekend focus list reports, that if you're going to be long anything, we like the precious metals space, mainly because it does benefit from the fact that right now crypto has a credibility issue, so that's got to work its way out, okay? And so if people are looking for a safe haven, if we see a collapse in the dollar, which we have seen more recently, as the dollar has broken down sharply off the recent highs, the UUP is trying to hold the 200-day line. If you look at the continuous dollar contract, though, the dollar sign USD, I believe it is, you'll see that it's actually broken the 200-day line. And if the dollar continues moving lower, then that's probably bullish for precious metals. It could eventually be bullish for crypto, depending on which one becomes the one that everybody has confidence in, and that may take some time. I mean, my guess would be it would be Bitcoin or Ethereum, one of the big ones. But in any case, we have thought, excuse me, we have felt that, where am I? Here we go, miners. If we look at the miners, the miners and the precious metals have been the place to be, and they're even up today. But I wouldn't be surprised to see them pull off. If the market keeps coming down, you get a lot of forced selling. They're going to take these down too. But this could set up a huge buying opportunity. And so far, though, we nailed the excuse me, the moving average undercut and rally here, undercut and rally here, and you're up pretty nicely. So you could use the 10-day line as a selling guide, or you just take your profits now and hang out. But there is also the possibility that there's something else wrong in the system, and that's what the market is having issues with. And it's sort of a stealth thing. The XLF is testing the 200-day line, and you look at some financials. So if I just zip over to my list of financials real quickly, you can see Bank of America is getting hammered. You can see that BlackRock hanging in there, but they actually had to shut down one of their funds to redemptions, or to disallow or shut off redemptions. Capital One looking pretty grim. Goldman Sachs rolling over. That's the index. JP Morgan looking like a short at the 20-day line. JP Morgan and Goldman Sachs tend to be the smart money among the financials, so they'll tend to hang up there a little longer. You can see Morgan Stanley starting to break down. Charles Schwab is hanging out, but don't be surprised if you see that breakdown. U.S. Bancorp rallying into the 20-day line after bouncing off the 50, could be a short there. Wells Fargo is the most concerning here. And there could be something in the financial system. I was reading, there's a couple of developments going on. Number one, Putin is talking about creating petrogold. So in other words, tying oil and gold together and using gold as a currency of exchange. And if that happens, that could have a pretty negative effect on the dollar. On top of that, you're also seeing, and I would suggest going to thecradle.com, because it's sort of a news page, like the news of Eurasian countries. So mostly the southern part of Eurasia, which would include, countries like Turkey, Pakistan, India, Iran, some of the smaller Asian countries below China. And they have articles. There's a recent article I read the other day, and I think I posted on my Twitter page, that these countries are looking to get together to create a new reserve currency, or a trading currency that they can trade in, because they're tired of the dollar hegemony. And now basically what's happening is everybody's getting screwed up because the Fed has been raising rates, and that has driven the dollar higher, driven other currencies lower, and created problems for those countries as their currencies dive against the dollar. So there is this backlash going on. And if that follows through, then that's very negative for the dollar and very bullish for precious metals on a dollar basis. And so, that's something to think about. And it's why we've come to the conclusion that this is a good area to be in if you are going to try and play the long side. Because if we think about it, if the Fed really does have to pivot, and it really does, okay, if that happens, then they should go, everything probably goes nuts. But I think gold and silver will go up as well, and the miners will leverage that and push even higher. But they've already had some pretty good moves off the lows. We've liked, not Alcoa, but AG rather. This one has come up off the lows. It's kind of basing, not really going anywhere. But I think these have, if you're going to play the long side, at least if there is some sort of a big, say, black swan that hits, gold and silver may get a safety bid. So that'll give you some orderliness to these vehicles. If you're playing either the PSLV, what happened here? Here we go. So we have, let's see, silver hanging up there, and also gold is hanging in there. So, but again, if the market does roll over and you get a lot of forced selling, then they're going to take these areas of the market down, and they'll take them down hard. So at least, though, my point simply is that if you need to get out, you'll probably be able to get out in an orderly fashion. And if something of a black swan nature occurs, then you may actually benefit. Anyways, do we have any questions? Because I don't have a huge amount to say about individual stocks. We saw a few breaking down. Maybe semiconductors are going to start busting. You see AMD underneath the 20-day line now. Analog devices just starting to bust the 10. AMAT is hanging around at the 10 and the 200, so I don't know if that's going to roll, right? I think some of these could become short targets as they hang up along moving average support and resistance. Same thing with KLAC. So this is one group I might keep an eye on as potentially offering some short sale targets in terms of names that have not already broken down, because most everything has already broken down over the last 2 or 3 days, and it happened very quickly. But that's very typical of bear market rallies. They have this tendency to end very abruptly, right, Chris?
That is correct. History shows this. So, yeah.
So, that's what's happening. So everybody gets all excited. The IB dweebs are over there with their marketing confirmed rally baloney, and buy this breakout and buy that breakout. So if you buy breakouts, a lot of times this is exactly what happens to you. Here's end phase on a breakout. That would have been last Friday, and it failed immediately. So now what you're looking at is a possible late stage failed base where the 10-day line becomes your covering guide, and then you would be looking for confirmation on a break below the 20-day line, and that would set that in motion. Okay, so that's another possibility. First Solar just starting to break down. I think I like it as a short close to the 20-day. Jinko Solar, I don't really pay attention. Solar Edge is up, but look at this. It's in a double top position, so I would watch this because it could very well reverse here. SunPower hanging just below the 20-day line, so that could potentially be a short entry using either the 20-day line or today's high as a covering guide. And yeah, there we go. The Dow's turning red. Sunrun, the same thing. Any questions? Still no questions, huh? Pretty quiet today. Telecoms are all breaking. Arista Networks. Sienna comes out with earnings on Thursday. That would be tomorrow. And just everything coming down. Let's just continue around. Travel names. Like I showed you, Alaska Airlines, another airline coming down. Everything's reversing because we're going into a deep recession. It's going to get bad. And I don't see how the travel industry escapes that. So there you go. Anyways, Hilton busting. And you can see all these started reversing either on Monday or a couple of days before, very subtly. Like Marriott, you can see started reversing last Thursday, I'm sorry. It rallied on Friday, but then you started busting on Monday, and now you're back down below the 20-day line. You're hovering at the 200. You can bust that next. So it looks grim. If you're long, of course. I'm short this market, so I was long miners and metals, and aside from my core positions in gold and silver, I've sold into these rallies and just going to kick back and see what transpires. I can always jump back in if I want to. That's the thing about stocks, you can sell them today and you can buy them back today. You can sell them this minute and buy them back the next minute. So, use that to your advantage when things get funky. Industrial metals also, they were starting to look okay. I think the lithium group is the weakest, okay? And we've talked about this one before, but Alcoa looks like it could bust the 20-day line, and then that's all she wrote. We'll see how that goes. But any of these, you see Camco, this one tried to regain the 10 and the 20 on Friday, and then on Monday reversed at the 10 and the 20. So that was tactically a short right there. Now you're heading for these lows, and you're probably going to get there. And if you saw that, that's something you could pick off. But you really have to be fast and nimble in this market because it changes on a dime, right? We found that out last Wednesday after Powell made his speech at the Brookings Institute, and you saw the markets just go crazy. But here's the thing. Here's the big move last Wednesday when Powell spoke, but it was a one-day wonder trade because that's been negated now as you trade down to the 50-day line. And my guess is you're getting ready to bust it. So, kiss it goodbye. Besale hasta la vista, as my grandmother used to say. Anyways, how safe is GBTC and ETHE since they are selling at discounts to value of their? What do you mean how safe they are? I don't understand the question. If something is in a downtrend and it's possibly going to go lower, why do you need to be long? I don't understand what safe means in this space because right now I don't think the space in general is very safe. either from an operational standpoint or financial risk standpoint, or just from a perception standpoint that people suddenly decide they don't want to be here because all the negative news is scaring them out. So, there's no such word as safe. Stocks are either in, and this would include cryptocurrencies as well, and precious metals and other commodities and stocks. They're either in uptrends or downtrends. Okay. I don't understand what the question means. So I wouldn't be long either one of these. I'm not even sure
also
I'd be short. Go ahead.
the grayscale instruments, GBTC and the Ethereum component. Well, there is the issue that grayscale could have exposure, so that not, it's basically the
okay, now
the issue. Clearing being able to honor the trade. So it carries that additional risk. I mean, certainly you don't want to be sitting in any of these things. And I would also say that until that uncertainty clears and until we embark on a new bull market, I would stay the hell away from these completely.
It was grayscale. Grayscale has risk based on what?
I think it's a possible counterparty issue that's been raised.
FTX or the other one that just went under.
Right, and I don't think Grayscale's been completely forthright and transparent in their response to their holdings. Okay. So let's wait and see where the dust settles here. But it's I think these are vulnerable until they make it very clear with actual data backing that GBDC is in financially good shape. Right now, there's a big question mark there.
All right. So I'm looking at this chart. Commercial metals is actually making a higher high. Seriously? I'm still going through the industrial metals group that I have. See, Freeport looks like it's ready to be a short here at the 10-day line. I think you could look at some of these names that have been hanging up as possible shorts. Obviously, the lithiums are all done. I think like Nucor possibly could start to break because they're going to drag everything down. And now that we're down, 52 on the Dow, this is getting worse. And my guess is we're going to close lower from here. We'll see. Usually right when I say that, the market will turn around and rally. Yep, there it goes. Not quite. Anyways. Reliance Steel, so that's another one hanging up there. The steels have been acting well, not really sure why. Southern Copper also hanging up there. Again, you got to watch some of these as they hold along 10-day moving average support, because if the market goes lower, they're going to break and they will trigger short sale entries. U.S. Steel even. So, because I look at something, what's been a really strong leader in this market, in this bear market rally. Okay, and bear market rallies do have leaders. Okay, and this has been one of them, but it's started to roll over at the 10 and the 20. So when you think about any other stock that you're seeing holding up near recent highs, and it's hanging along the 10-day and the 20-day line, you want to be attuned to any potential short sale entry triggers along those moving averages. Okay, so. Anyways, what else we got? Anything else, Chris? And we've covered some ideas, but I think, this is a tough market. If you can play it short, I say stay with the ETFs. Even the UVXY looks kind of interesting here. I am long that now. Where are you? Where's my intraday chart?
I was going to say that with the dollar breaking to the downside, it just could be telegraphing that, the market anticipates months down the road. So it could just be saying that after the next two rate hikes, Powell's going to have to, Powell's going to have to cry uncle. And so the weak dollar is already telegraphing that to the market. And I think, we're also seeing that in the 10-year treasuries. They've clearly broken their uptrend. And therefore, the question is this just a pause before they go higher? Maybe not. Maybe both the dollar and the 10-year treasuries are telegraphing that the Fed's hand is going to be forced and they're going to have to pause, then start reducing rates. Yeah. Probably it could be after they meet in December, or it could be when they meet for the second time in February 2nd, I think. And that would put the Fed funds rate at 475 to 500, which is a huge percentage for the amount of debt that the U.S. is carrying right now. So something's going to break, I think, by the time, if they can get that far. I think something breaks either in December or in February when they hike again.
Yeah, and that may be also implied by the dollar drop and the fact that precious metals are holding up for now. And also the whole move into the Dow is something more of not so much of a growth rotation, because if you look at the Dow 30, there's only a couple of them that have EPS ranks over 80, and only a few of them, a handful, less than 10, I believe, that are even showing profits, and even less showing positive earnings growth in the most recent quarter. So I think that's basically what you've been seeing with the movement into the Dow and its role as the leading index recently, because it's a defensive rotation. And that, I thought, was telling us something as well. And now we're probably going to see this come to fruition, all just before Christmas, for a nice Christmas crash. So they'll put that under your tree.
Yeehaw!
Yeehaw. Anyways, any other questions before we wrap it up? Appreciate the comments from people on Kevin. I will say one thing: Kevin had a very eventful life. He did a lot of things. So I was thinking back. I don't know if you ever came with us, Chris, but if anybody knows of the Rainbow Cafe in Hollywood on Sunset Avenue, it's sort of an iconic restaurant, like a cafe, and all the rock stars go there. So you'll catch Led Zeppelin there. You'll catch just about anybody. And every time you went there, whenever you went there, even if you went on a weeknight, there'd be a long line to get in. And Kevin knew the owner. I can't remember the guy's name, but we'd walk up. Kevin would say, "Oh, come on, we'll just go up front." He'd see the guy, and the guy would be, "Oh, Kevin." He'd run out and shake his hand and grab him. I think he was Italian or something, maybe Jewish, but very, that sort of gregarious friendliness. And he'd grab Kevin's hand and shake his hand and let us right in. And we'd go right in. So we could always get into the Rainbow Cafe. So, he had connections in all the right places. And
Yeah,
you went to a Who concert, remember? And you said
I was
kind of talked his way backstage.
Yeah, he knew a lot of great people, because he himself, had accomplished. He was one of the co-founders of Market Watch, for God's sake. And he wrote Conversations with the Top Traders in the year 2000. He audited every account, including mine. I gave him a stack of papers. I
remember that afternoon when he was at my house and he was going through our statements in my office while you and I were, I think, doing vodka shots.
Yeah, exactly. Yeah, doing some taste tests.
And he came out and he's like, "I don't believe this. I don't believe this." And well,
right.
So here, have a shot.
Yeah, he said I had the highest returns of anyone. So he put me in chapter 1, and then he put me also on the inside flap. And it was one of those things where in grad school, I felt, I think I'm really good at this, like not just really good, but I want to be number one. And then in the year 2000, this kind of like just addressed all my dreams of, doing a pivot out of nuclear physics and into investments. And of course, William O'Neill himself, by giving me that opportunity, facilitated all that. And so by the year 2000, when I was in this book, I was just, it was beyond a dream job. It was great. And then Kevin had these two, the Who concert, row 1, seat 1, row 1, seat 2 in the Hollywood Bowl, which is a massive venue. It fits like, I don't know how many. 50,
those were not easy tickets to get, I'm sure.
Right, and we were right dead center, and I still remember Roger Daltrey had this water bottle, and he like tossed the cap, and it rolled right over to me, and so I grabbed it and put it in my pocket. And then afterwards, I talked us into the backstage, and where I shook hands with Roger Daltrey, said hi, and these are the Who. To me, is one of the great bands of all time. Right up there with Led Zeppelin, Pink Floyd. So it was one of those moments in life, and Kevin made it all possible. So he
was in his own world, in the music world, because he actually managed a couple of bands at one time as well. So he was a jack of all trades, and he had a lot of connections. So he was well regarded, he was well liked, and he had a lot of connections. And he was just a fun person to know in a lot of respects. Like anybody else, he had a few, relatively few negative traits. I always thought he was a little bit too cautious about things in life, needed to be more aggressive. But, we would talk about all of that when we had lunch and quaffed martinis. But in any case, he was a good person to know. He definitely added something meaningful to both of our lives. Wouldn't you say, Chris?
Absolutely. He's a great-hearted guy, really, really smart, just grounded, like just so many good qualities that you want to see in another human being.
Yeah. So tonight, everybody make yourself a martini and toast Kevin. So he had a great life, and, everybody's life comes to an end, but, appreciate what you have and make the most of your time while you're here. And that's it. Take care, everyone.
So long, everyone.